Hey, what's up, my friends? So welcome back to this month's price action analysis where I break down to you the best trading opportunities that I'm seeing in the markets right now and explain to you step by step my thought process, where I'm looking to enter a trade, my winners, my losers, and much more. So nothing is going to be based on hindsight. It's all going to be trading in real-time charts. You will see losers, you will see winners, and I explain it all in this video over here. So let's get started. So the first thing that I want to talk about is platinum. This is a trade that I believe, right, we have covered in previous months' market analysis. And let me walk you through the thought process to why I got long on platinum and how I'm managing the trade. So if you look at platinum, at this point in time, this market is in an uptrend, right? It formed a series of higher highs and higher lows, higher lows, higher lows, higher lows, and over here higher lows, retesting back this previous swing high or resistance, which could become support. Then it came into this area of value, as you have seen over here. That's the first thing. Second thing. First thing is the trend. Second thing is the area of value. And the third thing that we have is an entry trigger. So you can see that over here, the price came into this area of value, which is support. And then it got rejected on this candle over here. So what I did is that I simply went long using a buy stop order above this high. So this means, right, if the price the next day it opens up and it breaks above the previous day high, I will automatically get into the trade. And why did I do that? It's very simple, because based on my market research, I realized that platinum is a market, right, that has a trending behavior. So this means that whenever platinum it breaks above the previous day high or breaks below the previous day low, it tends to have a follow through. It tends to have momentum, right, with that movement, right, based on the backtest data that I have. So with that in mind, if this market, or rather if platinum can break above the previous day high, I will be looking to enter this market, which I did. So again, bear in mind, right, I'm not just blindly placing buy stop orders above the previous day high or sell stop order below the previous day low. I have a set of criteria that I look for. Okay, so in this case, the price did break above the previous day high and I got entered long on this candle here. So my stop loss was or is 1 ATR below this low, somewhere about here. And my first possible target is just before this swing high, right, to exit half my position before this swing high. And this trade isn't the easiest trade to hold, because you can see that it went in my favor, consolidate, and then start reversing against me. So as of right now, it's still pretty much near my entry price, slightly higher. So it's still kind of like, in no man's land. So how am I managing this trade? So when I look at this trade, I realize that, okay, now this the swing low that I look at, right, is that it's no longer the nearest swing low. Now the nearest swing low to me is this point over here, which the market has formed recently. And my stop loss is still at the same location, somewhere about here. So my plan, right, is that if the price were to reach this nearest swing high, this swing high over here, I will manually exit half my position and then to hold the remaining half and to ride to see if the trend can continue in my direction. This is the way I'm managing this particular trade. So it's kind of like a combination between trend following and swing trading. All right, so this is how I'm looking to manage this platinum trade. So another trade that I took is the 30-year treasury bond. Same story. If you look at the daily time frame of this market, it is in a downtrend, right? Massive downtrend. And one of the things that traders would look, right, is they look at this chart. Hey, Rayner, if you're shorting this market right now, man, if you're shorting into this area of support, I get it, right? Because that is a dilemma that I had, right, in my early years of trading. I was like a hardcore support resistance trader. I only buy support, sell resistance. I would never, short into support, etc. But as I kind of like grow and mature as a trader, I realized that by doing so, right, it actually hurts my trading result. Because if you look at this chart, objectively, I'm just going to zoom in a little bit. If you look at this chart, and if you look at the recent area of support, if you look at the recent swing low, what happened? Well, this is one major one over here, this area of support. Price broke below it, retest, and then head down lower. Then if we have this minor swing low, price broke it. Another minor swing low, price broke below it. Minor swing low, broke below it. And right now it retraced and it's heading down lower again. So what are the odds of this swing low or area of support likely to hold? So if you ask me, my bet is, to predict that it's likely to break down. So with that in mind, I look for a trading opportunity, right, to trade alongside this downtrend. So the trading opportunity come in the 8-hour time frame. If you look at this chart, this is an area of value over here where previous support, right, or swing low here, which became resistance, and then resistance over here. Don't ask me why it sloped up higher. It's just like a error in my drawing. And if you overlay with the 50 MA, it also serves as a nice confluence factor over here. Tested once, almost twice over here, almost a third time here, and right now over here again. So again, you have this area with the 50 period moving average surfing, acting as confluence. So the entry trigger is very simple. It could be something as simple as a bearish price rejection. It could be like a bearish engulfing pattern, which you see over here and over here. Sorry, it should be this one here. Okay. So again, I hope now you also see the reason why I always set my stop loss a distance away from price structure. Because if you look at this over here at this point in time, okay, bearish engulfing pattern, I'll say that's a valid entry trigger to go short. And if you put your stop loss just above this highs, what's going to happen? In this case, you can see that the market spiked up higher on this candle. You get stopped out, stopped down, and then it reversed down lower. So ask yourself, how many times has this happened to you? And this could be prevented, right, by just setting your stops away from this obvious price structure. Give your trade more breathing room. Don't set your stop loss just above resistance, above the swing high, or just below support, or just below the swing low, because there's a good chance the market could just spike below it, hit your stop loss along with other traders, and then reverse back in the opposite direction. Okay, so this is the a trade that I went short on this bearish engulfing pattern. Again, first target just before this swing low, almost reaching it. We'll see how this one plays out. And then I'm going to hold the remaining half of my position, right, and see if the market can move in my favor. Okay, so just a couple of trades to share with you and the thought process behind it. So now let's have a look at, trading opportunities for this coming week. So first thing to share is the euro dollar. I would say it's a market worth keeping a lookout, euro dollar. So if you look at a daily time frame, you can see that euro dollar has recently broke below this key area of support. This area of support over here, right? Price broke below it, tried to reclaim it. The buyers tried to fight, stay above it, but couldn't, eventually give way, and sellers pushed the price and held the price lower below support. So now as a price action trader, where do you want to be shorting this market? I'm sure you don't want to short blindly in the middle of nowhere. So again, look for an area of value. In this case, we went down to a lower time frame, like the 8-hour time frame, and the area of value that I'm seeing over here, around the 119 area. So we're looking for the price to retest back this where previous swing low, which could become resistance or swing high, and looking for selling opportunities here. Could be something as simple as a form of a shooting star, something like that, right? Looking to, when that happens, you can go short on the next candle open. Stop loss 180R above this highs, target just before this swing low over here. And by the way, whatever I'm sharing is just for educational purposes. Whether you make money, lose money, it's all your responsibility. Okay, so this is one, right? Euro dollar, one thing to share with you. Another market to share with you, it's the dollar, the US dollar against the Sing dollar. So very interesting setup. So this one you can see over here, if I just zoom out a little bit on the daily time frame, this market has been in a sustained downtrend for almost the entire 2020 from here all the way down, downtrend. And recently, we saw that the price has broke above this area of resistance, this one here. Right, price broke out of it and consolidated. So now I'm starting to see signs of strength. I'm starting to see that, hey, this could be the start of a new bullish uptrend. This could be the start of a new bullish uptrend. Of course, anything can happen in the market. So this is why I want to manage my trade, manage my risk accordingly. So right now, since the price has broke above this area of resistance, I am bullish on this market and I'm looking for a low risk entry to enter a trade. And to do that, on the 8-hour time frame, you can see this is an area of value that's worth keeping a lookout. If the price could come down lower, retest this previous area of support, and then reject, close bullishly back above it, could be the form of a hammer like this. Okay, I'm looking to buy on the next candle open. Stop loss 180R below this lows. First target just before this area of resistance here. Okay, and if with the remaining half of my position that I'm still on, I would hold it and see if this could be the start of a new uptrend. If the price could, let's say it comes down, fill me at the lows of support, I exit half the position here to see whether I can hold the position and ride this start of a new uptrend. So this is a potential, I would say a 1 to 5 or even 1 to 10 risk to reward on the trade, risking $1 to make potentially $5 or more. So definitely a trade worth keeping a lookout for. And finally, one last thing to share with you is a stock that is worth looking, FCX, Freeport McMoran. So this is a stock bullish. You can see this uptrend, series of higher highs and higher lows. And what I like about this is that this stock came into this area of value, previous a swing high, which acted as a support, and then it came below it, and then reverse back above support once again. So you can see over here in this candle, it's back above support again. So this is a sign of strength, bullish price rejection. I went long actually on the next day open, a limit order at $32. I got filled. Right now the price is near break even or slightly against me somewhere about here. Stop loss again 1 ATR below this lows, and first target right just before this swing high over here. So again, I'm on this trade. Could be a winner, could be a loser, never know. So what I'll do is I'll just manage my risk. Even if it moves against me, I make sure that I don't lose more than 1% of my trading account. And for those of you who look at fundamentals, who looks at news and earnings, this particular stock, right, for the last 3 quarters, it has beat expectations. You can see over here, earnings surprise towards the upside. That's why it's green. Here, green as well, and here, green as well. So again, not a solicitation for you to buy this stock immediately, but just sharing with you my thought process for educational purposes. And again, if you want to learn more about such a trading methodology, price action trading and whatnot, then hey, just go down to this link over here, Price Action Trading Secrets. Get a copy of this book, Price Action Trading Secrets. It's a 140-page color trading book where I share with you, right, all the stuff that I know about price action trading. We talk about support resistance, how to draw it, how to tell when support resistance will break, how to trade reversals, how to trade breakouts, how to trade trends, and much more. And if you get a copy of this physical book right now, I will throw in 3 bonuses for you. First bonus is you get this digital copy, a PDF version of this particular book, so you can read it instantly, while waiting for your physical book to be shipped to you. Second bonus I have for you is this position sizing calculator, so you can calculate the exact number of stocks to trade so you never blow up another trading account. And even the exact number of Forex units to be trading, right, as well. So similar concept that can be used. And finally, I'll share with you this webinar, this exclusive training webinar called Part-Time Trading Secrets. And it's for you if you are trading part-time, right? And how you can actually, achieve consistent results, right? Even though you're trading part-time. So all this, right, bonuses come to you for free. So you can just get a copy over here at priceactiontrading.secrets.com. I will put the link below. Just, click this blue button and you'll be brought to this checkout page over here. And it comes with a 60-day money-back guarantee. If you don't like the book whatsoever, I'll gladly refund you in full. And you can still keep the book. Okay, so if you're in the US, this book is only $12.90 because it's being shipped and printed from the US. If you're in any other parts of the world, it's $18.90 USD, and it will reach you to any other parts of the world. So with that said, I wish you good luck, good trading. I'll put the link below, and I'll talk to you soon.